Hi there, welcome to kneppyinvests. In this Appendix 4C video for the June quarter, I'm going to look at a company called MSL Solutions. This is a company I've had a history with. I took a position in MSL Solutions about 3 or 4 years ago, and I think in hindsight that was a little bit too early. Because even though I took a position because I liked what the company was doing, I don't think the management were able at that point in time, were not doing the best things to lead the company forward. And we can see that with the share price in a well-defined downtrend at that point in time. But over the past year, management have turned things around. Even though cash receipts haven't really improved, or they are starting to improve and increase, they've decided that the best way they can reach a very important inflection point of becoming operational cash flow positive is to rein in the costs. And that's exactly what they've done. And because they've gone down that road, they have become operational cash flow positive, and they've achieved that important milestone 4 quarters in a row. And that's a very important point for a company to be. And we've seen the market really react to this company turn things around, particularly over the past, we'll say 6 to 9 months. The share price is increasing and the market is becoming more interested in this company. There are a couple of reasons why I became interested in MSL Solutions. They are a SaaS company for sports, leisure, and hospitality. So those two combined were the main reasons I became interested in this company. Their Swift point-of-sale platform is built for venues focusing on point-of-sale, customer engagement and membership, and data and analytics. Ticker code of MSL Solutions is MSL. In fact, when I bought into MSL Solutions, their ticker code was MPW. So they have gone a few changes in regards to their name and the ticker code. Market cap right now is 62 million. That's with the share price at about 19 cents. Receipts for the financial year 21, right on 28 million. Operating cash flow positive by 5.7 million. That's a fairly high number for a SaaS sort of company with a market cap of only 62 million. So I do think there has been a lot of negative sentiment built into the share price and valuation of MSL Solutions over the past few years. And even though the share price is now in an uptrend and moving up, there is still a bit of value when it comes to this company, particularly because they are operational cash flow positive. And the other thing I think is holding the market back from going all in with MSL Solutions is the fact that cash receipts aren't quite growing at a really quick rate, or even at a moderate rate right now. So I do think that little thing is holding the market back from going on all in on this company. And you can see that with the price to sales ratio only 2.2. For a SaaS company, you would expect that to be much higher. And typically what I look for in regards to the price to sales ratio for a SaaS company is 10. Anything higher than 10, you would be assuming that the company is growing their annual recurring revenue quite quickly. Anything less than 10, either there's really good value there or the company isn't growing their revenue all that much. And even enterprise value to operating cash flow 10.4 is right on the cusp of being a value play. You won't see many value plays in regards to SaaS companies out there. If you want more information on MSL Solutions and their Appendix 4C, they released that report on the 26th of July. I'd also recommend going to the website. A website of most companies is a trove of information, and you can get a lot of information just going to the website and nowhere else. Before we look at MSL Solutions June quarter results, just want to go back in time to the March quarter, see how this company was progressing at that point in time, and then see how they have performed over the last 3 months. Receipts to customers, 7.2 million. And I'll talk about how they've reined in costs in the next few slides. And in fact, I'll compare a quarter 2 years ago to the June quarter, and you can just see the difference in their costs just by comparing those 2 quarters. And they were operational cash flow positive in the March quarter by $1.3 million. And they did receive a little bit of support from the UK government in regards to coronavirus job retention scheme, and they only received payments of 47,000 Australian dollars. So not a lot of government support, but it all counts in the end. And they did grow their cash in the business from 2.8 million to 4.0 million. So they're not really burning a lot of cash when it comes to investing or financing activities for the quarter. So now let's have a look at the June quarter to see if things are actually progressing well for this company. Business is performing quite well for MS Solutions and has progressed during the June quarter. Receipts of customers up to $8.1 million. And they are operational cash flow positive by $2 million for the quarter. So if you translate that to a full year, you get $8 million. So there is potential when we get the financial year 22, we could be seeing this company being highly operational cash flow positive. And when you take into account the market cap is only 62 million, or around about that anyway, there could be good value if this business can progress as it is progressing right now. There is one thing that is holding them back, and I'll talk about that in the next slide. However, when you look at the cash on hand, by the end of the quarter, they had $5.4 million. They do have a little bit of debt, but they are net cash by about $3 million. So even though they have a market cap of 62 million, the enterprise value is less than 60 million right now. So let's talk about the thing that is holding you back from taking a significant position in this company. One of the things I really like to see in a company is receipts or revenue growing through time, because if receipts or revenue isn't growing, then the company itself really can't grow, because the only way they can grow profits or cash flow without receipts or revenue growing is by cutting back costs. And cutting back costs is only a finite thing they can do, because eventually it's going to get to zero. So the best way a company can grow is increasing receipts and revenue through time and maintaining the margins they have on those receipts and revenues as well. That's a very important point to make. And when we look at MSL Solutions receipts history going back to September quarter 2017, we don't really see that during that period. However, we did see receipts from the start of this period to the September quarter or the June quarter in 2020, when receipts got down to 5.2 million. And ever since that low point in receipts of 5.2 million in June of 2020, we have started to see signs that the receipts are growing in MSL Solutions. It's gone from 5.2 million to 8.1 million in about a year's time. So that's 5 quarters or 1 year in a period. That's a good growth rate in receipts during that period. And right now, there's 2 ways to look at this. And it all depends on your risk profile. If you're a risk-averse investor, you might want to wait to see if MSL Solutions can continue this momentum going through maybe the next few quarters or up to a year. If you're more like me and like to be risk-taking at times, now could be a good time to take a position in this company with the valuation being quite low, particularly when you compare it to the revenue and the receipts of the company and the fact they are operational cash flow positive. As I went through MSL Solutions activities report for the June quarter, I was very satisfied to see this provided in their activities report. And it's just the net operational cash flow history of the company going back to the start of the financial year 2018. And any bars are in red is periods of time or quarters when MSL Solution was operational cash flow negative. And any time you see it in blue or green here, that's when they were operational cash flow positive. And they've also provided the subsidies they've received from government because of COVID-19. And we definitely have seen an improvement in the operations of this company over the past 3 years, because the company has gone from being operational cash flow negative to operational cash flow positive. And one of the reasons they have achieved that is growth in receipts over the past year. But there's another reason they've achieved that as well, and that is related to costs. So let's compare the costs of the company from 2 years ago to the June quarter 2021. The main reason I wanted to compare the September quarter 2019 to the June quarter 2021 is because receipts and customers is very similar in both of these quarters, even though they're almost 2 years apart. So right there you can see receipts from customers haven't grown over the last 2 years, but they have been growing over the past year. And the most important thing to take away from this is, even though they had very similar receipts in these 2 quarters, 2 years apart, or almost 2 years apart, that in one quarter they were highly operational cash flow negative, and the other quarter highly operational cash flow positive, and they were highly operational cash flow positive in their most recent quarter. And the whole reason they have turned things around in this company is simply because they have pared back some of those costs. General administration costs have gone from $2.3 million down to $1.3 million. That's a saving of $1 million in one quarter. Customer and technical services have decreased by $700,000 in the one quarter. Sales, advertising, and marketing have decreased by $500,000, while direct cost of sales have remained steady. So they've really decreased quite a few of these costs, and that's gone down to the bottom line. They've now become operational cash flow positive. And that's very important for the market. So you'll be able to see when I show you the chart how the market has taken the very fact that this company is now operational cash flow positive. It's a very important inflection point for all companies to achieve. And I think the management of MSL Solutions realized that about a year or a year and a half ago. This is the weekly chart for MSL Solutions going back to the middle of 2017. And we can see the share price from that time in the middle of 2017 for the next few years. And there's two reasons why the share price was falling from around 30 cents to a low of about 2.5 cents in April of 2020. And those two reasons are the company was operational cash flow negative, and more importantly, the company wasn't growing their receipts. In fact, the receipts were going backwards. And that's the main reason the market fell out of love with this company. However, things turned around as we moved through 2020. They became operational cash flow positive towards the end of the year, and we can see the share price starting to move upwards. And right now, the share price of MSL Solutions is in a well-defined uptrend. The share price right now is at 19 cents. And the last time it was at 19 cents was way back towards the end of 2018 when the share price was falling. And again, the main reason why we have seen a shift in sentiment in MSL Solutions is because the company has become operational cash flow positive and cash receipts are starting to climb. So right now, I wouldn't begrudge you if you decided to take a position in this company, because I am even thinking about doing that, simply because the operations of the company are improving and the company's share price is in an uptrend right now. As I journey down the road of achieving my mission in covering every single ASX company that achieves an operational cash flow positive June quarter, look out for videos on these four companies. BetMakers, SciDev, which also happens to be one of my favorite companies on the ASX. And then two companies I have not done a video on in the past. That's Answerada and AI Media. That is all I have for this June quarter Appendix 4C video for MSL Solutions. If you do have any thoughts or opinions about this company, I'd love to hear it, because even though I do have my own thoughts, they could be different than yours. And it's always good to hear differing opinions, because that's how you learn in the long run. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.